To be honest, it doesn't look like it's going to end well for the UK. Well, if you remember last year with the whole pension fund issue, with the LDI funds, I did a whole video on this on my channel. Just go on my channel, search up LDI, investment strategy. There was a whole debacle around that, okay, this pension funds that are feeling the pinch from higher yields from the gilt market, the higher interest rates from the Bank of England was basically going to create a massive disruption in the financial markets, in the economy, and the Bank of England had X amount of hours to do something about it, which the Bank of England did. They stepped in and they ended up buying a bunch of gilts to lower those yields down and soften the pain that the pension funds were going through. And also, if you remember, there were a couple of articles as well with the commercial properties linking to certain private equity funds that were also going under, and certain property managers as well, or these hedge funds that were under a lot of pain when it comes to withdrawals. They had issues as well. And now, fast forward, with the Bank of England continuing its rate hike, it did not stop its rate hike, it continued its rate hike, and we see the inflation metrics still sticky from when you look at the headline number, and also when you look at the core number specifically, it is continuing to move up higher. Now, before I get into the UK inflation report, my name is Daniel. You're watching InfraVest. InfraVest is an organization that promotes financial literacy, teaches you about the macroeconomics. If you like content like this, subscribe, hit the subscribe button, hit the like button as well, and comment below your thoughts and opinions or any ideas that you may have on this video or future ideas as well. Now, let's get into it. UK's inflation report came in way hotter than expected. Let's start with the headline number coming in at 8.7% year over year. This is the number that everyone, the media, looks at. And this number has more of the energy prices tied with this metric. And this number came in higher than expected. The forecast number was 8.4%. But when you look at its previous height, that was last year, it was around 11.1%, has come down drastically to 8.7%, but still staying sticky when you compare from last month's number, which also came in at 8.7%. Yes, has come down from its highs, but it's still high up there. 8.7% is a high number. Now, a number that maybe not many people are focusing on, or it's not being talked about if you're novice or new to macroeconomics or inflation numbers or the markets, is the core number. The core number that excludes fuel and energy prices. As we've seen, fuel and energy prices have been dropping, which is why the headline number is dropping for look at all the other countries out there. But the core number, which excludes this very volatile number, went up higher, and making a new all-time high to a number which we see here. If I pull it up, 7.1% versus the expected of 6.8%. This is a new high for not only this year, but surpasses last year's number and surpasses the whole all-time high numbers when it comes to core inflation. So core inflation is moving up higher while the headline is slightly moving down, but still staying sticky. And part of what's causing these numbers to move up higher, according to this article, which I'll link in the description for you to read up on from Yahoo Finance, it says that food prices is one contributor that is still significantly higher from last year. Even though top food retailers might have cut their prices, that is feeding to higher prices. Most importantly also, not only taking a look at the core the headline number, but the core number, which has other factors into it. And when you look at the services inflation, that number tends to be less volatile, just like the core number, and that number rose to 7.4%, sparking fears that the economy could fall into this wage price spiral. So the wage component, the services component higher, and the inflation, especially on the core side, continues to move up higher and higher, which makes you think one thing. What will the Bank of England do? Will they continue its rate hike cycle? Of course, when you look at these numbers that are not getting better, they have no choice but to continue until maybe you get the same scenario again like last year, or maybe even worse with the pension funds, with the gilt market, or something in the UK markets that tends to, or maybe ends up turning over. Maybe it's the private equity industry that ends up completely collapsing, sending ripple effects maybe to not only the pension funds or the hedge funds, but to the banking sector, which then brings in that pain, which possibly will also bring inflation down lower and then cause the Bank of England to pause and then eventually cut. But there's no way, if the economy is still doing okay or fine, there's no way that the Bank of England, just like other central banks out there, are going to start cutting rates, especially when you have inflation continuing to move up higher. Now, headline inflation may be one thing, but the core inflation that is moving up higher is a very big concern for central bankers. And they want to definitely tackle that down to their target. And if core is moving up higher, that's going to seep into a lot of the consumers who are feeling the pinch when it comes to buying groceries or paying for certain services, etc., etc. And that's going to make the situation of that spiral effect, like this article was talking about with the wage inflation, continue if the Bank of England doesn't step up and do something about it. Now, maybe if they do step up too much, like I said, it brings that recession scenario. But right now, with higher inflation, it does not mean that you're going to get even a single pause from the Bank of England, because this is a problem and they don't want runaway inflation, because that would be considered a very big failure for the Bank of England. So it'll be really interesting to monitor how this inflation metric comes out. What's their plan for future rate hikes? How high do rates go in the UK before things start to really, really, really feel the pain? And we've heard and seen that already last year. Last year, we reported on the pension funds, the LDIs, the private equity funds, the commercial real estate, and that was just the beginning. It'll be very interesting to see where this plays out, especially if the Bank of England continues with its rate hikes and continues to create more pain down the road for consumers, businesses, and the whole economy. Let me know what you guys think. Leave a comment below, subscribe, hit the like button and bell icon to be notified on the next video, and I'll see you guys around. Cheers, bye.